This is your daily briefing from the Dinar Daily, the most comprehensive source for updates on this unfolding financial story. Across the country, a quiet but undeniable shift is taking place. The conversation around the Iraqi dinar, the Vietnamese dong, and the Zimbabwean dollar has moved from a theoretical debate about if a revaluation would happen to a practical discussion about when and where these currencies could be exchanged. This change in focus, particularly noticeable throughout 2025, reflects a growing sense of readiness among those who have been following this topic closely for years. What was once confined to online speculation is now a tangible consideration for a wide range of investors, from private individuals to large-scale financial entities. For a long time, the primary question for currency holders was simply whether a dramatic change in value could ever occur. That perspective has now evolved. The current focus is on the logistical challenges and practical steps required for an official exchange. This is evident in the private investment circles, secure messaging groups, and even among mid-level financial advisors who are fielding more and more inquiries from clients holding these currencies. The shift from if to where and when signals a new phase in this narrative, one that is increasingly focused on tangible preparation rather than pure speculation. It is a proactive stance, driven by the understanding that opportunity often favors the prepared. This new reality is leading many investors to seek out legitimate and secure locations in the United States to convert their holdings should an official adjustment in value take place. The process is not as simple as visiting a local currency exchange booth, as these facilities are not equipped to handle the specific requirements and scale of such transactions. The purpose of this guide is to provide a detailed roadmap, offering insight into the types of facilities that meet the stringent criteria required for a secure and compliant exchange. Ultimately, having this information and acting on it is what will separate those who can navigate the process smoothly from those who may be left waiting at closed doors. The conversation has indeed taken a more serious tone since early 2025. While in previous years discussions were dominated by hopeful projections, the real issue now is practical readiness, particularly for large institutional clients, private wealth accounts, and politically connected individuals. For these groups, preparation is not just an idea, it's an active process. Many have already had preliminary consultations and even scheduled tentative appointments at the private wealth branches of major banks. Their legal and financial teams are working to coordinate strategies to manage potential windfalls, with a focus on tax compliance and inheritance planning well in advance of any official announcement. This heightened level of readiness among a select group highlights a significant disparity. Everyday investors often remain in the dark, unaware that major institutions are quietly building the necessary infrastructure and conducting training protocols to handle large-scale exchanges. The message is clear: those who delay in identifying a legitimate exchange facility or fail to secure pre-registration through private banking channels may face significant challenges. The risk is not just a less favorable rate but also potential delays, stricter compliance barriers, and even denied access due to limited capacity at specific, high-security locations. Readiness is about more than just holding the currency. It's about having all the logistics in place to act without hesitation when the time comes. It is crucial to understand that not all financial institutions that offer foreign currency services are prepared for this kind of transaction. A neighborhood bank branch or a mall kiosk, while useful for converting a small amount of dollars to euros for a vacation, operates under a completely different set of standards. A legitimate facility capable of processing large-scale currency exchanges adheres to a far more rigorous set of protocols. First and foremost, these centers must be in full compliance with U.S. Treasury and FinCEN guidelines, which includes strict anti-money laundering and anti-fraud measures. This level of compliance ensures that every transaction is transparent and follows federal and international law. A critical component of this process is the Know Your Customer (KYC) protocol. For large-scale transactions, this is not an option but a mandatory requirement. This includes providing proof of identity, verifying the source of the funds used to purchase the currency, and in some cases, undergoing background checks. Beyond the paperwork, a true exchange center uses advanced technology. They employ sophisticated authentication scanners that can detect counterfeits at a microscopic level, eliminating any doubt about the validity of the notes being submitted. All transactions are logged in digital registries that connect directly to banking networks for real-time rate confirmation and secure, transparent payouts. These facilities are often heavily secured with state-of-the-art surveillance, biometric access, and even armed personnel. They function more like international clearinghouses than simple exchange booths, providing a level of professionalism and security that matches the high stakes of global finance. The East Coast, as the financial center of the country, is home to some of the most advanced and secure exchange facilities. In New York City, for instance, Wells Fargo Private Client Services in Midtown has established itself as a premier option. This location is renowned for its personalized concierge-level service, treating every client as a private wealth account holder. Security is paramount with armored security details, biometric access points, and strict confidentiality agreements. Washington, D.C., a global political hub, offers the HSBC International District Suite, which caters to diplomats and international organizations. This facility has a reputation for absolute discretion and unparalleled global connectivity. Charlotte, North Carolina, home to Bank of America's headquarters, features the South Tryon Street Wealth Hub, equipped with advanced digital tools to streamline the verification and processing for high-volume clients. In Boston, the TD Currency Operations Center provides pre-cleared access for vetted clients, ensuring a secure and efficient process. These East Coast centers are not just about exchanging currency. They are fortified financial hubs designed to handle these transactions with the highest level of security and compliance. The Southeast and Gulf states also provide a robust network of verified exchange facilities, each strategically located to serve the unique needs of their regions. In Miami's Brickell District, Chase Global Currency Services is positioned in a central hub for international commerce. Here, multilingual advisors assist clients from around the world, and secure private vaults handle high-volume transactions with discretion. Atlanta has emerged as a financial powerhouse for the Southeast, and its Truist Wealth Exchange in Buckhead offers a pre-registration platform that allows investors to schedule appointments far in advance, significantly reducing wait times and ensuring a smooth process. Houston, at the heart of the U.S. energy industry, hosts Fifth Third Bank's VIP division in the Galleria, a facility accustomed to high-volume transactions for oil executives and international traders. It is equipped with armored transport services and advanced validation systems for large-scale note processing. In New Orleans, PNC's Special Currency Center specializes in multi-currency conversions for clients with diverse investment portfolios. These facilities are critical access points, serving investors across the Gulf and southeastern states who are preparing for large-scale currency redemptions. While often overlooked in discussions about international finance, the Midwest has developed a strong network of sophisticated exchange hubs. Chicago, the financial capital of the region, houses the U.S. Bank International Desk in the West Loop, widely considered one of the most advanced Forex centers outside of New York. This facility offers structured payout services and seamless integration with global banking systems. Detroit, a city undergoing a financial renaissance, is home to the Huntington Exchange Center in the Renaissance Center, providing armored transport options for safely moving large amounts of currency into the banking system. Cleveland features KeyBank's currency terminal on Rockwell Avenue, which uses AI-driven scanners to verify high-value notes with unmatched precision. Meanwhile, St. Louis hosts Regions Bank's Conversion Suite, a facility that handles structured payout plans and contract rate access for eligible clients. These Midwest facilities demonstrate that exchange readiness is not limited to coastal cities, but is available to investors in America's heartland, providing direct and secure access to advanced services without the need for long-distance travel. On the West Coast, the approach to currency exchange combines financial sophistication with a culture of discretion, mirroring the dominant industries of the region like entertainment and technology. In Los Angeles, Citibank's global office, in Century City, has built a reputation for handling high-value transactions for VIPs in the entertainment and sports industries. Clients are offered private suites, armored delivery services, and personalized financial consultations to ensure exchanges are processed with complete confidentiality. San Francisco, with its tech-driven economy and a concentration of private wealth, hosts Bank of America's private wealth headquarters on Market Street. This facility is known for offering escrow services, rate lock contracts, and customized payout structures for investors focused on long-term financial planning. Seattle adds to this network with the Navy Federal Exchange Access in Belltown, a facility that adheres to strict compliance standards and offers a level of confidentiality that is particularly appealing to federal employees, military personnel, and contractors. Collectively, the West Coast facilities are a blend of discretion, innovation, and regulatory precision, providing secure and professional services for a diverse clientele. The Southwest and Mountain States complete the national network with facilities designed to meet the needs of fast-growing, geographically diverse markets. In Las Vegas, Chase Private Client Exchange operates in Summerlin with around-the-clock security, armored safes, and a staff trained to handle high-net-worth transactions discreetly. The 24-hour operation is especially appealing to international clients and those needing immediate liquidity. Phoenix is home to Wells Fargo's structured desk in the Camelback Corridor, a hub that prioritizes real-time note verification to prevent delays and disputes. Denver's First Horizon Global Hub in the Loudoun District combines biometric screening with encrypted rate lock tools, ensuring both security and transparency. Finally, Salt Lake City's Zions Bank Elite Desk stands out for its hybrid model, offering both in-person exchanges and armored mobile delivery, providing flexibility for clients. These facilities in the Southwest and Mountain regions ensure that investors in these areas have comprehensive access to high-security options without the need to travel to coastal centers, ensuring equitable participation in any potential revaluation process. For those with large volumes of currency or those who prioritize the highest levels of privacy and security, an exclusive set of options has been developed. Among the most innovative are mobile exchange units, armored vehicles operating discreetly in major cities like Dallas, Atlanta, Chicago, and Los Angeles. These are not just vans, but rolling command centers staffed by licensed currency brokers and protected by armed escorts. Designed for VIP clients who cannot risk traveling with substantial holdings, these mobile units offer a confidential, point-to-point exchange solution. Equally significant are private redemption centers, which are not disclosed to the general public. Access to these sites is strictly by invitation, often initiated through Tier 1 wealth groups or elite private banking networks. These centers function like fortified compounds, complete with biometric verification and layered access protocols, and allow for direct banking connections for structured payouts and instant settlements. Additionally, certain airport currency terminals at major hubs like JFK, LAX, DFW, and ATL offer discrete redemption services for first-class travelers, though these are also invitation only. These terminals provide a high level of efficiency for international clients already accustomed to private lounges and fast-track security. They are an example of how the revaluation infrastructure extends beyond traditional banking centers into exclusive, highly secured environments tailored for those who prioritize speed, privacy, and absolute security. These options demonstrate the comprehensive and layered approach being taken to prepare for a large-scale financial event, ensuring that the necessary infrastructure is already in place and ready to serve a diverse range of clients with varying needs for discretion and security. In the current environment of 2025, almost every credible exchange facility operates on a strict appointment-only basis. This is a direct response to both heightened compliance requirements and the expected surge in demand once a revaluation is formally announced. The booking process typically begins with a secure online registration or a dedicated hotline that connects investors to a vetted scheduling system. During this initial step, identity verification is a crucial component, requiring the immediate submission of digital copies of government-issued IDs, such as passports or driver's licenses. But the documentation needs go much further than basic identification. Investors are expected to provide clear proof of purchase or ownership of their currency, which can include receipts from authorized dealers, certificates of authenticity, or digital invoices from licensed platforms. For larger amounts, documentation proving the source of funds is mandatory, as this allows regulators to confirm the legitimacy of the purchase. Compliance paperwork is also non-negotiable. Anti-money laundering (AML) and Office of Foreign Assets Control (OFAC) forms must be completed, along with client intake sheets detailing financial history and the purpose of the transaction. In some cases, a non-disclosure agreement (NDA) will be required, especially when structured contract rates are offered. Without this comprehensive preparation, a transaction that should take a few hours could be delayed for weeks, putting the unprepared investor at a disadvantage. Readiness, therefore, is not a matter of choice. It is a fundamental requirement for a smooth and successful exchange. Your ability to navigate the process depends entirely on the completeness and accuracy of your documentation. In essence, the preparation of your paperwork is just as important as the currency itself. For those who are monitoring the behind-the-scenes activities within U.S. financial institutions, subtle but telling signals continue to emerge. Reports from mid-level executives, internal memos, and even software engineers working on banking platforms confirm that the systems are no longer theoretical, they're in testing mode. Several major banks, including Wells Fargo and Chase, are reportedly pre-verifying client currency holdings quietly through their wealth management divisions to ensure that when the green light is given, clients are not caught in a last-minute scramble. Furthermore, internal forex platforms have shown irregular activity, with the IQD and VND currency pairs flashing briefly during low-traffic windows. While these appearances are quickly removed, the fact that such testing is occurring at all suggests that the infrastructure is being readied behind closed doors. Executives familiar with compliance software note that transaction templates for exotic currencies have already been built into these systems, complete with reporting pathways to federal agencies. These indicators suggest that while the public narrative remains cautious, the internal banking infrastructure is essentially complete. For informed investors, this means that waiting for a mass media confirmation may leave them unprepared when banks open their schedules for official exchanges. Revaluation of this magnitude does not happen in a vacuum. It requires a precise level of global coordination among various entities, including central banks, governments, and international regulatory bodies. By 2025, significant milestones have been reported that suggest this alignment is already well underway. The International Monetary Fund, IMF, has confirmed that Iraq has met key economic benchmarks, such as fiscal discipline and banking reforms, which are prerequisites for any serious rate alignment. Simultaneously, the U.S. Treasury has circulated compliance memos to Tier 1 banks, outlining the necessary steps for large-scale exotic currency redemptions. These memos reportedly include enhanced due diligence protocols, anti-fraud safeguards, and structured payout guidance, all of which point to a state of heightened preparedness. On the technological front, forex platforms have been quietly testing API codes for the IQD, VND, and ZWL currency pairs, integrating them into broader trading systems even if they are not yet visible to retail traders. This convergence of readiness across global institutions indicates that the foundation for a revaluation has already been laid. The final piece is a coordinated public announcement, a synchronized trigger event where the IMF, U.S. Treasury, and major forex platforms publicly align. At that moment, the revaluation would transition from a rumor into a structured financial reality. For investors, the implication is clear. The infrastructure is ready, compliance has been built, and the financial world is simply awaiting the official signal to begin. Exchanging your currency will not be the final step in this process. In many ways, it is only the beginning. High-volume investors, in particular, must be prepared for a series of follow-up procedures and financial responsibilities that will shape the long-term outcome of their holdings. One of the first steps will be comprehensive wealth audits and tax obligations, as banks and federal agencies will closely scrutinize large deposits to ensure compliance and accurate reporting. Once these initial hurdles are cleared, the real work begins: protecting, preserving, and growing the exchanged funds. Diversification strategies will be essential, which may include placing assets in FDIC-insured accounts, establishing domestic or offshore trusts, or building a multi-currency portfolio to withstand global fluctuations. Beyond simply protecting assets, growth strategies will be paramount. Options can range from real estate acquisitions and gold-backed assets to private equity, technology ventures, and conservative long-term equity funds. Each of these choices requires careful planning with professional advisors. The most important principle to remember is to avoid the temptation to liquidate everything without a clear strategy. Sudden liquidity without a plan often leads to poor decisions, overspending, and eventual regret. The most astute investors will use the period following the exchange as an opportunity to execute a disciplined vision for wealth that balances protection with sustainable growth, ensuring their financial future is secure. You are now equipped with a comprehensive guide to verified U.S. exchange centers, the appointment processes, insider banking signals, and the global factors that are converging. However, information alone does not produce results. Success in this area will depend entirely on timely, disciplined, and precise action. The steps are straightforward. Confirm the nearest legitimate facility, book your appointment as soon as registration becomes available, and meticulously assemble all the required documents. It is also crucial to educate your trusted circle so that no one is caught unprepared. Those who take these steps will be positioned to move first when the revaluation window opens, while those who delay may face bottlenecks, limited access, or even exclusion if compliance thresholds become more restrictive. Ultimately, this moment is about more than just converting notes into dollars. It is a chance to execute your long-term vision, protect and grow wealth, honor commitments, and lay the foundation for a lasting generational impact. It's a significant financial transition, and in any transition, the prepared are not only the ones who survive, but also the ones who lead.